Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today is our segment with Rohit Srivastava. He's the Chief Investment Officer and Portfolio Manager for Saroj and Bhanu Fund. But before we get into the Cannabis Index, let's take a look at last week's capital raises. So according to this Yahoo Finance article, it says, yet another week packed with cannabis news. We saw Lefa Health terminate its cannabis supply agreement with Afria after it said that the letter failed to provide Alifa with the equivalent of 175,000 kilograms in cannabis products. Afria responded by saying that it had every intention of fulfilling its obligation. MedMen Enterprise announced Tuesday it terminated a deal to acquire multi-state cannabis operator PharmaCann. The company is also terminating its chief financial officer. MedMen decided against the PharmaCann acquisition, which was the basis for its huge projected pro forma revenue numbers. And now they're going to need a new chief financial officer to help with those pro forma revenue figures. Hexco posted financial results that were lower than analyst expectations. The company also withdrew its financial outlook for 2020, projecting net revenue for the year of around $46.5 million, down from $48.5 million. And their chief financial officer is also resigning. So they recently came out with $125 ounces. That's about $4.49 per gram. Probably not enough revenue to remain a going concern or to stay in business, which is why a lot of these CEOs and CFOs are leaving. This Yahoo Finance article goes on to say, quote, the cannabis carnage continues as more cannabis companies find themselves either cutting back on lofty estimates or coming clean to the marketplace about their true financial situation. Hexco had to dial down its overly optimistic revenue forecast, and shareholders took out that anger with sell tickets, and they expect at the beginning of more announcements like this to come. Looking at some of the cannabis ETFs delivering some losses last week include Horizon's Marijuana Life Science Index. They lost over 13%. ETF MG Alternative Harvest Index, almost 11% down. Advisor Shares Pure Cannabis ETF is down over 11.5%, as well as the Cannabis ETF down over 10.5%. Amplify Seymour Cannabis ETF is down over 10%. Tilt Holdings announced an agreement with 6 of its remaining founders regarding the immediate forfeiture of $60 million stock options granted at the time of the merger, as well as a final separation of most of those founders from the company. Looking at individual equities that were gainers and losers, according to this Benzinga article, is Cresco Labs. Their shares decreased by over 2.5%. Kronos was down almost 1%. And Zermba Pharmaceuticals was down almost 5%, which we end up talking about in the podcast as a potential buy opportunity. Additional losers is Aurora Cannabis, down almost 4%. Afria's down over 10%. And yet, despite some of the slowdown in the recent public markets, we're seeing some lower amount of cannabis capital raises, which overall could be a good thing, more normalized. As in the regular world, you see a lot smaller dollar-sized deals and maybe more frequently. So overall, maybe we're kind of starting to see less speculation and more normalization. Some of the investment and mergers and acquisition activity in the cannabis space last year for capital raises included Integrated CBD. They raised more than $50 million between 2 tranches, a senior secured debt raise and a Series A financing. Voila is a California-based producer led by NBA veteran and cannabis advocate Al Harrington, announced the closing of a $16 million funding round. Other mergers and acquisitions include Cresco Labs acquired Gloucester Street Capital, the parent entity of Valley Agroceuticals, one of only 10 cannabis licenses in the state of New York. And then Fire and Flower, a cannabis retailer in Canada, announced that the closing of an acquisition of 8 cannabis retail store locations from Cannabis Cowboy Inc. Looking at the weekly summary of capital raises, number of deals this year over last year, we are literally at half the amount, 7 deals this year versus 14 deals last year, with a lot less money raised. It's 82 million versus 745 million around the same time last year, but a lot more mergers. So less capital raises, more mergers, and that's kind of that next wave, that next cycle is consolidation. There are 5 M&A deals this year versus 1 last year. Cultivation and retail continue with the capital raises by sector. A lot of MSOs were early on in the year, with the latter half being a lot of cultivation, which is kind of that sign of consolidation. So the cannabis capital markets are fluid, but to help us normalize that is Rohit Srivastava, Chief Investment Officer and Portfolio Manager with Saroj and Bhanu Fund. It has an artificial intelligence-based algorithm that has predictive analytics. The technical analysis is also a great insight into what the market might do next week. We're going to go over Cannabis Index Fund. So Rohit, take it away.
Thanks, Josh. And I'm here in Washington in this awesome rainy weather. But let's go over the disclosure, which is this is all for entertainment and just for learning perspective. We're not giving any financial advice. So don't take this and go and start buying stuff. So this is just for learning and use your own analysis in order to buy stuff. So like before, this is an index which is equally weighted investments. Like if you invested equal money into all of this, that's what we're analyzing. And this was about 1.5 months ago. This was last week. And we're here at very similar position, but looks like it is achieving the support of 475. So it is holding that 475 support, and we'll see like how it holds up in the next couple of weeks. We tried to bounce at 535. It didn't happen. And at currently it is at the 61.8 Fibonacci retracement position, which it could go to 50% as well at 390. So at this point, what the summary of that is that it is basically holding the support from the last week. And let's see in the next couple of weeks, like how it retraces back. If it retraces back, then probably we'll talk about what would be the buying point of that.
What's the likelihood of it hitting that very bottom support at $3.90? Because it looks like it keeps ticking up and then falling back down.
Yeah.
And so if it continues with that trend, we're going to see it until the end of the year, maybe even January, until it might hit that final support. Is there a likelihood that trend keeps going down?
That's a very likelihood, and that brings to our next section, which is the cash in and outflow. So hitting that 390 is very likely, but it also depends on. This is a very strong support. The 475 is a very strong support, and if it doesn't, then hoping that 390 would be is the next stopping point. But coming back, the answer to that might be in this one, which is the cash in and outflow. How much cash is being taken away from all these talks versus how much cash is flowing back in there. And this was 1.5 months ago. This was last week. And you can see that there is a little bit of retracement back up. Some recovery is happening on that, which is very positive. And I hope that this recovery is going to continue. But it still has a long way to go in order to recover to a point where more money has been pumping into that. But at this point, it looks like, there is a slight recovery. So the chances are that if it recovers back from to this orange line, then that's the point where you would see the retracement back to the 535 on this point. So that's probably what I meant earlier saying earlier that, if it retraces back from 475, then we'll have to talk about what is the buying point, what point we should buy back into that.
There's some serious resistance on that next slide. If you go back, so when it hits that zero line, there's some serious resistance there. You can see that all the way back in, it's predominant in early July. And as soon as it hits back, you kind of might see it reach that yellow line, which is the average daily trade value per equity. But as soon as it hits that, definitely comes down, if
That's
not
correct.
already at that zero line. So we're almost there. It could test that. I don't know what the likelihood of it. Will it get back to the average daily trade value? We'll have to wait and see.
Yeah, we'll have to wait and see. That's the fun part. So at this point, like I said, that it had tremendous gain in the last 1 week, but we'll see if it can cross that zero and reach out to the orange line. For the short-term investors, this was like about a month ago. This was 2 weeks ago. This was last week. And last week we had only one stock, which the Altria Group, which probably we bought it last week. And this week we have a bunch of stocks which basically trigger to buy, and out of which Arna Cara, GW Pharma, and the Zimbra Pharmaceuticals. Those are the ones which popped up just yesterday as a buy signal for that. And some of them and others are still performing a little bit better. like you can see that Artia, which we bought last week, it's up by 5%, and all of these, the PMD is about another 2% gain. So all of these have a reasonable gains happening on that. So we'll see how these new additions performs in the next 1 week.
And that's a lot of new additions. I mean, that's probably double what we had last week at 8 recommendations. That's more than we've had in the last several weeks. So that could be an indication that we're reaching that near bottom if it's starting to highlight now.
That's correct. And that's where, when we see this curve turning around, like this was last week, and this turning around back to back in the last 1 week, that is where we talk about like that, you know what, there's a lot of new addition, and the chances are that we are entering into this earnings cycle, and some of these might perform a little bit better, and or it might be a false signal, and if it's a false signal, it'll sell off at the stop losses, and that's where the short-term investment comes into the picture. But I want to talk about one of the equity especially, which is the GW Pharma. And while I was doing this analysis, there was an interesting thing which I saw, which is that the GW Pharma is one of the, probably in my view, one of the strongest cannabis stock. And it has been in this industry for a while for medical purposes, and for whatever reasons, this is a stock at this point which is at a very good buying point for a long-term investor. Like if I am a long-term investor, I'll probably get into this right now. And the reason is that it is at a point where all these 3 critical moving averages are converging. The MACD has turned around after a long time, and it is moving towards a positive signal. The convergence has failed a couple of times, like last 4 times it has failed. But what is different this time is it's not just the convergence, but if you look at, it is at a 61.8% Fibonacci retracement, which is at $119.25 from the highs. But the very important part, if you look at this weekly chart, the weekly chart is trying to bounce back from a 200-day moving average. And it sounds like it's very bearish, and it is trying to retain this 200-day moving averages at this point. But my thought process around this, like if I'm a long-term investor, I would get into that, because it might fall even below that. It might lose another 5 to 10%. But most of the stocks in this area, and especially a stock like GW Pharmaceuticals, it is bound to bounce back into that unless there is something catastrophic happening in that. But from what I can see right now at this point is that this is a very good buying point for a long-term investor, in my view.
There's been some disappointment from the investor standpoint on Epidiolex, their epilepsy drug. There's been some deaths, just natural people that pass away with epilepsy, and since it didn't cure it or help them to survive, there's been some disappointment, I guess. It's also probably because 1 ounce equivalent is $32,000 that you're going to be charging insurance companies, and the equivalent, on the black market's $300, in a rec shop, a competitive place might be $125. And so Epidiolex is going through some rigorous scrutiny right now, as well as a lot of companies. Even Constellation Brands, which put in $4 billion, has been hit with $50 million write-offs. And so we're kind of seeing a lot of this retracement, but it could be that opportunity, like you mentioned, that bad news could be baked into the cake. We might see, the bottoming out, which provides an opportunity to invest now.
How common it is in this kind of industry that any kind of scrutiny like sabotages the company, or in that I believe that most of these scrutinies, there will be a resolution to that, and they'll have like a better testing or a better performing product after.
And they're the only ones who have had testing with the FDA. So you mentioned that this is probably one of the strongest ones. And I'm not sure if that's because of their balance sheet or market cap, but they definitely have the most credibility, having paid and gone through that process to be approved for their product Epidiolex for epilepsy through the FDA process. That's pretty legit.
Thanks. That's very informative for most of the people who might be watching this about GW Pharmaceutical. But summary of that is that we are at a very testing the 475 support, and if it bounces back, which is it's holding up right now, it might be a point to get in. We'll talk about in the next week about if it is. And for short-term investors, we entered into 4 new positions, which we'll see how it performs in the next 1 week.
Well, for next week's crystal ball prediction, you have to come back to the Talking Hedge and find out. I want to thank my guest, Rohit Srivastava, Chief Investment Officer and Portfolio Manager with Saroj and Bhanu Fund. Thanks again for talking through us with this technical analysis, artificial intelligence-based algorithm with predictive analytics for entertainment purposes only. With that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.